Okay. Alright. Welcome everybody to today's episode as well. Yesterday was amazing. And if you missed yesterday's lessons and yesterday's episode, you gotta go back and watch it. Because yeah, we had fun. We didn't just have fun as well. We learned. We literally built this model the whole of yesterday. So if you have seen the video, you understand what you are seeing, or you kind of maybe this time you're giving some thoughts, you know. Yeah. So what we will do today is we will continue with what we left where we finished yesterday. And yesterday we started with the higher time frame and that flow. We did done the first part. We have two parts. We have a higher time frame when we push this here so that I can talk about this a little bit. Okay. So yes, this is like the foundation of the plan, everything. So what you have to see is, let's say you are looking for it to buy, right? You have to wait to see that the higher time frame order flow has shifted. And when the higher time frame order flow shifts, let's say now we are in this region that is clearly bullish, we want to buy. Flower has gone wherever it wants to go. It's broke a structure, formed a weak structure, and now price at the demand zone, at the extreme. It has swept liquidity, you know, it has inducement, this kind of thing. It has everything that you want to see. When this happens, you can then right away from here and, you know, buy with your 30-20 pip stop or whatever. And it is cool. It is totally cool, you know. Because if that's what you want to do, and if that's what fits your plan, it is amazing. Do it. Like, yeah. But we have to have this regular time frame execution. So when price comes into this region, this is where and when we jump into, or we jump to the lower time frame. So let's see, we had our 4-hour structure. 4 hours is bullish, we wanted to buy. 4 hour internal, so it's bearish, and now 4 hour internal is here, right? And for me, we have gotten a fractal chain of character. We have gotten a fractal chain of character here, or fractal structural break, and price is around here. So now we are on the 15 minutes, and we are expecting, let's say we are on the 5 minutes, and we are expecting to buy. We won't jump in straight away to buy here. What we will do is we will wait and look for order flow to shift, or we wait for strong liquidation to build, and we will get into that. We will get into strong liquidation, and these are entry models. This is later time frame execution. So you wait for the entry model, and then you continue, like you start to do it, you start to buy, and you are buying with the higher time frame. But you are not just staying in the 1 minute or 5 minutes looking for change of characters and looking for strong liquidation to take entries. No, trades might go in your favor. Yeah, trading anything is possible. Trade might go in your favor, but bro, you don't give yourself the best chance to win than this. Alright? So let's see, from whatever we did yesterday, we identified here to be our 4-hour internal structure. It is really, we could have classified it to be our 4-hour internal, 4-hour swing, and this one will be M15 internal or whatever. Totally fine. But looking at what we were looking at yesterday, and we yesterday it was meticulous. One by one, we went through the higher time frame narrative, we went through continuation, pullback phase, we went through a book of structure, how we expect a pullback, and how we use that narrative, that knowledge of after the book of structure, we expect the pullback, how we use it in combination with multi-time frame market structure, which is a run on a higher time frame is a trend on the lower time frame. So we combine these kind of things with the three-type structure, which is the swing, internal, and the fractal. The swing internal, and the fractal. So swing, internal, and fractal. These are the three-type structures. We went through that one as well. So when you have this internal range here, which is the 15-minute swing range, and now the internal has switched bullish, right? What you are looking for here is that yes, you have built your narrative, like you have some, how do I say, it's like you know what you are doing in the lower time frames. You are not just buying because it looks like a buy. No, you are not just buying because it's price moved impulsively like this, and you have gotten a corrective structure. Price can trickle like this and still break this loose. Like anything is possible. Anything is possible. So what you have to have is a mechanical framework, something that will guide you through the market, so that you get some kind of structure. When you are in the market, so that you will be acting randomly. So what we just continue with yesterday, what we continued yesterday. So we identify that this one is our 4-hour swing structure from the highs here to the lows. Let's go back, then we will continue. I think I will add more notes into today's ones as well. So let's go. So yesterday we talked about this. We talked about this swing structure and why we are expecting this swing pullback. But when we will confirm the swing pullback, and when we will continue to buy, when we will likely stay out, where we are waiting for things to play out and this kind of thing. So yesterday was heavily packed with lessons, but what I will continue is, now we will continue with the medium time frame. Yesterday we built the narrative on the higher time frame. We identified that price is bearish, internal structure is bearish, swing structure is bearish. Now fractal structure has switched bullish, which means it is the earliest confirmation that you might be getting the swing pullback, this swing pullback. And especially price is not into EQ, equilibrium, price is not into here. So you can look to take trades from the premium, sorry, for the discount, and buy towards the upside, into at least here or into deeper into the premium prices. And when price switches, we can look for it to sell. But what we were from the trading plan, we were told to map relevant supply and demand regions, map our current swing range, which we did use current swing range, current internal range, current fractal structure. So these are swing, fractal, internal, and whatever. We have it. and we are to mark our relevant supply and demand regions. This is what we call POIs, point of interest. These POIs are areas where I'm going to look for trees, because most my strategy is based on catching this kind of moves, catching this kind of moves, catching this kind of moves, catching this. So if you are going to do this, you can't afford to take, you can't afford to lose more, because you have to be precise. Like, if you miss, you have. It's not like I'm preaching FOMO, but you have to be cautious and not to take multiple trees, because it will cost you. So I was trading like 2 trees a day, 2 trees a day. Sometimes one, like I was trading one for a day. I will collect 7%, I'll be out. Collect 6%, I'll be out. And it was fun. It's fun. So this was a higher time frame. We built it. We marked our relevant supply and demand regions, which is our POIs, and we marked our inducement levels, or our liquidity and inducement points. But what we are going to do today is these POIs that we marked. We have something called POI selections. Basically, it is about validating the POIs, like which POIs am I looking for to trade from, which POIs am I avoiding. So this is what we call POI selection. This is what we are going to do today. But because we trade on the medium time frame, like that's our immediate, but that's what we look for, our immediate bias. So if the immediate bias is bearish, we run through the phases. If the phase is, let's say we are looking for it to buy, we are buying against the swing, but with the internal like this, that's the immediate bias. That's what we are looking for. We are not looking forward to. We are not looking for. Although we have this sales, it is guiding us. Not that it's coming here. We'll be looking for, like, we'll be cautious, or we can be looking for it to sales or whatever. It should be guiding us. The main, like, our main focus should be here. It should be within this range. It should be within the immediate bias. It should be within the immediate range, the internal range, the medium time frame internal range. So we look for immediate bias on the medium time frame. So that's the reason why I'm going to combine these two in this video. We are going to map our current, our immediate bias, our POIs, and the narrative they give. It means are we in the pull trend, are we in the counter trend, where are we, what are we mitigated, this kind of thing. We'll go through that on the medium time frame. And what we will do is the POIs, we will do the POI selection. So that, I think that's what we are going to do today. So let's jump straight away. Before we go into your 15 minutes, let me finish the summary. So we have currently broken a swing structure, which means we are expecting a swing pullback. After a break of any time frame, after a break of any structure, we expect a pullback. So after a break of swing structure, we are expecting a swing pullback. But the swing pullback is only confirmed when we get an internal break, which is this. This is an internal break. It is only confirmed when we get an internal break of structure. So we can look forward to play this with the idea that we might be switching bullish. So we can look forward to buy here. But I pointed out again yesterday that the highest probable trades, the highest probable trades are phase B, like the earliest one, let's say here, when we get the first break of structure and the price pulling back here. These two are the highest probable trades. And when we mitigate extreme structures like this, although this is a strong structure, internal structure is stronger than fractal structure. So it's fine to win this and we can break this, and when this one breaks, it means clearly we can be having a pullback and we will continue the bearish structure. Right? It means although we are expecting the swing pullback, it's happening here. We have to just wait, right? But with the human nuance, you can just identify, okay, we are breaking an internal structure, and let me go to the daily and show you one thing as well, so that you understand the human nuance that I'm talking about. So this is a zone that I was expecting from last year. From last year June, I think it was around here. Yeah, this was at September. It was around June. So we started around June. Around June, I was expecting price to come into here for us to get a pullback. We didn't. So we moved from June, September throughout last year to this year. And what happened was, we got this swing wave structure, and we mitigated into this. Yesterday, we went into the lesson of where we will get a range, we will get an initiation, we get a mitigation and continuation. We got to this range, price initiation of the range. Although we mitigated it, but with the end mitigating, we continue the move, and now we have mitigated the zone. So if I'm looking for a pullback, then ideally here, because it is unmitigated, it also has this inducement in front of it. So it is a strong demand region, right? It is a pretty strong demand region. So when price breaks a swing structure into here, there's no probability the swing, you can get a swing pullback from here, because it is a strong, we can get a pullback. Look at the reaction that has caused price from here. It is pretty strong. We are expecting price to break this internal high, and we are expecting price to do it from this demand region. So it makes sense why I might be looking for buys maybe from these areas and targeting the highs, and having the idea that it might not hold, and we will break it, because we still have another structures here. So I'm on the day, but today's main objective is on the 15 minutes. I just wanted to point something out, and what I wanted to point out is that the human nuance, you can use a little bit of expectations, experience and whatever to your advantage. So let's go to the 4 hour before we go to the 5 minutes, 15 minutes to continue our lessons. So you can see here we have a strong liquidation being clearly built into the zone. We had 1, 2, 3, 4. We sweat this liquidity above the highs here. I know we incur much deeper into the liquidation, but I'm just pointing it out. Consider this as a teaser. So we sweat all of the liquidity above here, and we continue the move, right? So this is what we call a fake. This is what you call a fake break. A fake break. We go to the upside, classifying it to be a strong structure, and we liquidated into the zone. So when we get a strong liquidation on the 4 hour, in front of a region that has this massive inducement, it is not crazy to expect this pumps. This one can happen. It is not crazy to look for this. And if that's the case, it makes sense why, if price is at the highest here, let's say at the highest here, and on the 15 minutes you've broken an internal structure, you can expect a pullback into the deeper regions, because you're expecting this massive pumps, right, into the demand, into the discount. It is the same knowledge, but how you arrange the time frames, plays a massive role. Plays a massive role. So let's jump into the 15 minutes. Let's continue. Alright, alright. We're gonna be alright. We're gonna be alright. Alright, so on the 15 minutes, when we come here, maybe some might see, some might classify it as a swing structure and classify this as an internal. But this is you being too zoomed in. You don't have to do that. Like, no, don't stress yourself. Right? Don't. So now we are at 15 minutes. I have the note here. I'm going to throw the notes, but I'm still going to. I'm going to digress sometimes. You know me. But yeah, I think it's going to be fun. So medium time frame. Let's add into our notes. Medium time frame is equal to immediate bias plus POIs. So okay, let's make what? Medium time frame equal to POIs, so immediate bias. And POIs. So this is the medium time frame. This is the medium time frame. What we are going to look for. We are going to look for the immediate bias and the POIs. Yesterday, I pointed out that the medium time frames and the internal structures perform similar rules. Not the same exactly, but similar. What I mean by similar is that the medium time frame switches trend to facilitate the objective of the higher time frame. Whilst the internal structure switches trend to facilitate the objective of the swing structure. So here on this time frame, what I mean behind the scene that, follow me closely. Here on this time frame, you can see that here was the last internal, here was the last swing structure. We get this one break, we have this, and we bring this to the kind of body close, and we have the pullback, and we bring this to the kind of body close, and continue to move. But when price, when price breaks this internal structure, it means this swing structure is just pulling back. It doesn't mean the whole time frame has shifted. If you get me, let's use the current price action. So for the current price action, if here breaks, it is a confirmation that we are getting the swing pullback on the 4 hour. But we just mean that the swing structure on the 15 minutes has switched bullish. Wow. Okay, I don't know if you but this they are the same, but they perform similar ways. So we are going to talk more about their fulfill, what they fulfill. Alright, so POI selection, strict minimum criteria is okay. It led to a break of structure, which is structural zone. Yesterday I pointed it out, but I will continue with it. So why are we even looking for zones on these legs? Before, let me go back and talk about the supply, the theory behind the supply demand, how we look it on the chart. So we have a zone, we have another zone, we have an area where there is a balance, right? Which means we call it fair value. It is in a range, like we agree on the price. When price comes at the highest, then sellers will step in. They will be pushing price over the downside. Like they feel like, oh, it is a good price for them to sell. When price gets to the lowest, buyers will step in. They will push price to the up. When price gets to the highest, it is within a balanced range. But what we need is when there is balance, price doesn't move. That's why price gets stuck in the range. But eventually there will be an overwhelming side. There will be an imbalance. When this imbalance happens, price will shoot out to either up or down. So let's say in this case, price shot to the upside. When price does this, what we expect is, since we've broken out of the range, the highs that was pushing price to the downside, and we've broken the highs, we expect a pullback. Remember, after a break of structure, we expect a pullback. So we expect a pullback. We expect price to come to the downside to mitigate the demand region, or the region that push price to the upside. And when price push into the zone, we expect that the people that step in here to push price to the upside will step in to push price to the upside again. Basically, this is it. So we have a name for it. This is what we call. So here is the range. Here is the initiation. Here is the mitigation, and we have the continuation. Okay, so this is it. This is one. I think if we get through this and you understand this, you can be able to follow me, at least for the first time, when we are doing this. It is not hard, but it is you need understanding. Yes, you just have to understand. If you understand, you can read the market, like how you want it to read it, and make sense for yourself. So yeah, let's get into the diagram. If I can copy this, will be amazing. Alright, so I think it has to be inverted, or is there turning around this? Alright, I'll need this, but I will also need this thing for. Okay, so now we are going to get into this. What we are going to get into is the foundation behind, we call it the heartbeat of price action. if the moment you see it, you can't unsee it. So then you put on the range again. So we are within the range. As I already explained, you have an imbalance. We have a fair value where we agree on the price, and eventually the price will, there will be an imbalance, and price will establish a direction. When we establish a direction, we call it initiation. The moment the reason is, you see, when we are in a range, there's a vacuum. But what will happen is price will initiate out of the range to establish the direction. When we initiate out of the range, this is what we call initiation. So when we initiate to the upside, the lows become the strong structure because it is the lows that pump price to the upside. So we initiate out of the range, which means here is initiation. When this happens, because here is the demand region that cause the price to shoot up, we assume, or we know that here is where the money is. Here is where the big men are willing to step in to push price to the upside. Or whatever happened here to push price to the upside will happen here again. So we are just waiting for price to come here. The process or the movement that price will pass through to pull back down to mitigate this region or to mitigate the demand region is the mitigation. No. Is the mitigation. So when you get a mitigation into the demand region or into the range, what you are looking for is you are expecting the people that step you from here to step in again. So what you will look for is continuation to follow the direction of the established trend. It is the same for bearish. You have a range. Price will initiate out of the range to the downside. Price will be bouncing within the range, right? And we will start to initiate. We initiate out of the range. We will start to pull back into the zone, right? And after we mitigate the range, we will continue the move to the downside. So this is the range initiation. So we have range initiation, mitigation, and continuation, right? This is it. This is exactly what we are looking for. This is what we are looking for. So if you see price initiating out of the range, you are expecting a pullback and a continuation. Now, when you are playing against the pullback, when you are playing against the trend, it means you are in a pullback phase, or you are in a mitigation phase. When you buy within this range, you have to be quick to take your target. You have to be quick to take your profit. You can be holding your trades for longer, a little bit longer in the continuation phase. Alright, but within the range, within these ranges, this is overly simplified. Sometimes you will get multiple range, especially if this is a 4-hour structure. You will get multiple range, let's say like 3 or 4 pivot ranges within the main range, and you go to the 15 minutes and you get like 2 ranges within each or 3 ranges within each range. Which one are you going to sell? Which one are you going to look for the trade from, and which one are you going to avoid? And knowing that the lower you go, the higher probability that you can either miss your trade and the trade will go in your favor, or price will take you out and try to move like because of where you enter. So pre-wise selection becomes pretty important when the radio is on. You can classify this, you can read the market, but if you can't have the PO, if you can't have the mechanics to identify high quality POI to trade from, and even don't have the patience to wait for them and restate your rules, bro, we are going to take a lot of it. So the strict minimum criteria, this is exactly it. This is exactly it for the supply and demand. So any ranges within here will be supply, any ranges within here, any ranges within here will be demand. Any ranges within this buy moves will be demand range or demand zones. And any ranges within this here will be supply ranges. Any ranges within here will be supply ranges. Okay, so any range within the sell range is a supply range. Any range within the buy range is a bullish, is a demand range. So I will clear all of this, or maybe we just keep it there for tomorrow's sake or whatever. So okay, we are back on the 15 minutes. Now I'm going to hide everything for a minute so that you can say this is the range. You can see here is the range, here is the range. You've gotten what you've initiated at the range from here. Here is the range. We initiated at the range. We are having a pullback, which is the mitigation. We have mitigated the range and we are continuing. So M15, this is the M15 zone range. Here was the M15 internal range. So any range, let's say when price broke this internal structure here on the 15 minutes, when price broke this, here was the confirmation that pullback has the 15 minutes pullback has started. It was a 4-hour range, it was just a 4-hour factor week, but it confirmed the 15 minutes internal. And when this happens, the swing structure is bearish, the internal is bullish, and it is the earliest one, which means it is one of the highest value trades that you can take. These ones as well. I remember I took this trade, I got smoked and price shot up massively. And here too, I took this trade, I got smoked and price shot up massively. Yeah, so we have this internal pullback here, internal structure here. This is the confirmation that here, this is the confirmation that the swing pullback has started, right? Which means we can look forward to trade from okay, yeah, we can go to trade from these ranges. But before, I will select the ranges from these supply regions, because we use the supply regions as timing in the location where price is likely to come into when we look for trades. So you can just meet here, get a book of structure here, and get this correct moves. It is a trade. It is a valid trade. You can actually take that. But yeah, we have these regions here. But let's go into this area. So we want to move for trades from this demand range. You want to look for trade from this demand range. We know that order flow, this is a bullish order flow, so from the beginning to the end. Here's a bullish order flow, but we will get into that later. Here's the demand range. So we will be looking forward to, here are the ranges where we will be looking forward to select our POI from. So what you do is, the minimum switch criteria is that it lets you book of structure. So you have to find a range within this one that lets you book of structure. It doesn't matter. It can be fractal, swing, and internal. But what you have to find out is that the higher the structure, the stronger, the more significant it is. So within here, you can see that obviously we have the extreme structure here. This one has to be around so we have the mitigated extreme. Here is the extreme. Let's see if you are looking for it to trade from this. Here is the extreme because it lets you break. Another one is added confluence. So another added confluence is a flip. What is a flip? What is a flip? We talked a little bit about it yesterday. We will go much deeper into it today. So that is added confluence. What is a flip? A flip is an area where supply and demand exchange orders. It's like that's at their junction. So here you can see here is the flip zone. All the price goes it got swept. Excuse me. But you can see why the price was attracted to that. The flip zone is the areas where supply and demand switches. The switches power. So here this supply is the strong region because here it is also a chain, which is something we'll get into later. It is also a chain. It led to a break, which it is a structural zone. It led to a break. It was a flip zone. Right? It was a flip zone. When price came into this area, we were expecting price to break this low, for price to literally stay here, push strong to the downside. But it didn't happen. What happened was we had a reaction, and price broke above the reaction and broke above the zone. And we pulled back into the flip zone, and we continued the move. We pulled back into another flip zone, and we continued the move. And one thing about it that makes it a valid regions as well is because they all led to a break. They are even the direct one that led to this internal break, and that caused this break. That's one thing. Another thing is also you get to that. So a flip, here's a flip, and when we extend this, you can see this is also a flip. So we have price moving price pushing price back into this for this buying move here, and we had another pullback into this flip, anywhere from the beginning of the reaction to the end of the reaction into this flip will be another buying move for this opportunity for price into another regions by way. This is where we are getting to. So we have this M15 range here. We are going to select our POIs. We are going to select our POIs. And the straight criteria is it has to be a structural zone. You have to let your look of structure. All of this let your look of structure. We moved one, we pulled back, and we continued. But we classify here all of this to be one move. No. We don't. We got this move here. We go this to the upside. And then we go this to the downside, confirming that here is a strong structure. Right? And we move this again to the upside. like we are building strong liquidation because we have a fake break here. Establishing that here's the body structure. So I'm trying to be good because this here it just doesn't make sense. So when we have this here is the range, right? Here is the range. When we have a breakout of the range like this, when we get a breakout of the range like this from this impulsive move to the upside, we will expect this initiation, we expect this mitigation. This is the initiation, this is the range, this is the mitigation, this is the continuation. This is the range, this is the initiation, that is mitigation. Because you can see, all the guys continue the move. The best move came when we mitigated the range and we continue the move to the upside. Right? And it came from some of these from this year. Yeah, it came from some of those windows there. So you have this, you have that, you have this mitigation, you have initiation. So what we look for is a structural zone. Did it break a structure? Yes. If it did, cool. Was it a flip zone? Yes. So you can see you have this little flip here. So we have this flip zone here. So from the beginning of the reaction to the end, here's our flip zone. And we have the move right into the zone, into our single candle pivot, which was also part of a chain. It was also part of a chain. And we continue the move. So this is another period. So the point price is here. We could have also selected this range because it is also a flip. Oh, okay, it wasn't a flip, even at the highs. Okay, this was a flip, but we swept it, looking at strong. We went to the upside. You know, yeah, this is a little bit higher than I thought. So that a valid demand region has to have a flip zone. So the structure criteria is it has to be a structural zone. It has to break a structure. So we are looking for it to sell from here, buy from here because it's led to a break of structure. Which means it is a structural zone. It is not a flip zone. It doesn't have inducement in front of it. It is part of the chain. It is part of the chain. So it is part of the chain. It's a structural zone. It is the extreme. It is in the premium of it is extreme. It is within the discount of the range. It is part of the chain. Does it have inducements? Available inducement. I think we have. So what is available inducement? What we have, what we call strong liquidation. So available liquidity, available strong liquidity inducement. Strong liquidation is what we call a fake break. It's when let's say price is moving to the upside and you break it to the downside like this.
So when price is coming to the outside, you might think, oh, price everything around here, and this one will be a strong structure and we sell, but price will actually break this before we continue the move. So we broke this to lure you into this trade here, and you will use as liquidity, and you trade it into the zone. This is strong liquidity P 101. Yeah. So price just move like this. You came let's say here we have this strong liquidity in front of this zone. So we broke this low to the downside, and we broke this, making here a strong structure. What happened? Price moved to the outside, and we saw this liquidity. Making here even a strong, another strong liquidation has been built, and we swept it. We haven't quite triggered it, we can't even quite tap into the zone. But we can see where the reaction from this massive V shape is coming from, where this is coming from. So higher time frame order flow, lower time frame execution. This is lower time frame internal structure, lower time frame swing is bullish. There is lower time frame internal is bullish. The lower time frame immediate bias is the bullish. The immediate bias is the bullish within this swing structure. And what we are going to use to confirm is the fractal structure. So we can see that here is the fractal structure. We moved impulsive, we came to the outside, continue the move. So when we read this, it is a confirmation that now internal is bullish, fractal is bullish. So you can look forward to trade against this, and because of where we have mitigated and the strong liquidation we have built in the 4 hour and the strong liquidation we have built in front of our demand region here, looking forward to sell on the 5 minutes, looking forward to buy on the 5 minutes and the 1 minute. It's not bad. It's not bad. Hey, it's not bad at all. Okay, so this is the medium time frame with bias. And one thing I want to point out is when we are looking at the market like this, although we speak to the narrative that it is a 3 types structure, we are looking at more than 3 type structure. So here you can see that you have this 1, 2, and a massive pullback. Yeah, which was we were trading within here, we broke, so we were trading within here, and here we broke it with a candle body close, we pull back and continue, and we broke this. And we are moving to the outside here. So when this happens, it is good. It is good. When price comes into this area here, I'm expecting a pullback from here into my PY. Excuse me. Okay, so now the M15, the fractal structure, we can see that the extreme has already been mitigated. This was the extreme structure, and it has already been mitigated. We had this sweep into the zone. So I will take the whole zone as well. When we draw this demand region and we extend it, you can see that we have this flip zone. So this flip zone has also been mitigated. We had mitigation into the flip. So we had when we are looking for to buy from this area, you can see that you can either wait to actually mitigate this region before we continue the move. Because we can get it's like it's not like I'm just sitting out, because this is when I had this trade and I was able to get it at 4.17% before. Yeah, before I target. Here was my target. Here was my target. I was able to get at least 4% target. It wasn't even a massive move, right? So it's not like I'm just sitting and waiting. But we are building this narrative. So in the 15 minutes, this is what we are looking at. The POI, we have this one as a flip zone, which led to a break. Here is the fractal structure. Here is the fractal break of structure. Here is the fractal break of structure. And this, when we are looking at structure, it is not much of a significant structure than this. So yeah, structures within here, we'll do structures within here. Okay, we'll keep here and we'll keep the weak region within the zone. Does it have inducement? Is it a flip zone? Yes, it is. So this is the flip zone. It is a flip zone. It's a structural zone. It has inducement. This is what we call inducement. So we have inducement, the available liquidity, which we are expecting price to sweep into this region before we continue the move. Does it have a sweep? We don't have a sweep. Okay, yeah. So this is what you are looking for. Make the POI selection. This POI means it is unmitigated. That's the first. It is within the premium of the price. It is stuck within a higher time frame region. Again, it has inducement. It is a flip, and it is a structural zone. So this is a valid region where we can look for price to come into, for us to get a move to trade to the upside. So this is what we are looking for. We are looking for price to come into because now we are in the initiation phase. This was the range. We initiated at the range. We are expecting a pullback into the demand region, so that which is the mitigation, so that you get a continuation, right? And when you get a continuation, it is not just here. We are expecting continuation to the upside, to the extreme. Alright, cool. So if price, let's say here's what we are looking for this. But let's say when price comes here first, you can look for it. You can jump into a 5 minutes or the 1 minute, and when you get a change, when you get a strong liquidation built here, you can look for trades around here to play the pullback into this demand region before you get a continuation. Now that is only when you get this mitigation, because this is also a teaser into the entry liquidity entry model. You have to have a medium time frame POI mitigation. Before you can jump into the strong liquidation and validate it and take the trade. So yeah, I can only take trade when we are around here or here. Here, when price mitigates here, I don't have to wait for us to get a change of character here. I can just go to the 5 minutes and wait for strong liquidation to be built here and look for retreat to that way. When price comes here, rather, I will just have to wait for a change of character within this, maybe on the 15 minutes, like a visible change of character here, before I look for sales. Alright. Okay, so this is POI selection. This basically, we have only 2 POIs here, but this has already been mitigated. All of this has already been mitigated, but this is fresh. This isn't, it didn't bring any structure. Although it bring this structure, it is not as significant as this clear fractal structure that has changed the types of, it has aligned with the same structure. What else? It is in front of the POI that we have that led to a break. So it can be used as inducement, right? So that's the reason why I'm not selecting this. It just doesn't have much to deal with, right? Okay, so this will be all for today. It wasn't much of a video. Yeah, it wasn't much of a video. I just wanted to go through this. I just wanted to go through the medium time frame narrative and the POI selections. Okay, so yeah, this is what I'm looking for to happen. I'm expecting price to either pull back to break this, to mitigate into the major demand region before we get a move, or liquidate into this and we will get a trade and continue the move. And when price gets into these two regions, when I'm recording, maybe we will record the entry because yesterday we went to the narrative, today we are into the immediate buyers and the POIs. And when price gets into the ranges, we'll go to the 5 minutes and 1 minute to look for trade. Okay, so that will be all for today. For now, at least, until price comes into the zone. Bye.